The chair recognizes Ms. Smith.
Well, thank you, Madam Chair and Ranking Member Gallego, and thanks to all of our panelists for being here today. I appreciate this very much and having an opportunity to learn about and hear your thoughts about what we need to do to provide a robust and reasonable regulatory framework, especially for stablecoin. And I want to focus my questions on kind of better understanding how consumer protections should work for a stablecoin and how they might work under the Genius Act in particular. So, Mr. Massad, let me ask you. So, under current law, financial institutions are subject to the Bank Secrecy Act. So that means that financial institutions are required to actively work to detect and prevent money laundering and terrorism financing and other illicit uses of our financial system. So I want to understand how this would work under the Genius Act. So as I understand it, the Genius Act would extend these obligations under the Bank Secrecy Act to issuers of payment stablecoins. Is that how you understand it?
That is correct, yes.
Okay, and so then under this legislation, what would happen? What would happen once a payment stablecoin is issued on the public blockchain? What happens to those Bank Secrecy Act obligations once the stablecoin is issued?
Thank you for the question, Senator. The challenge is that those stablecoins can then be transferred without going through a centralized intermediary. Our entire BSA, AML, CFT framework relies on centralized intermediaries. Mm-hmm. All transactions run through those centralized intermediaries in some way. And so we've imposed obligations on those intermediaries, banks and others, to do the compliance checks that we want. Stablecoins are very different in that once they've been issued, they can be transferred, exchanged for other crypto assets without going through a centralized intermediary. So we have to sort of creatively rethink how we achieve these goals. And I think that includes extending the regulatory perimeter, if you will, but also looking at a lot of other creative measures requiring stablecoin issuers to aggressively monitor transactions and freeze stablecoins, looking at ways to design the smart code of a contract so that a transaction doesn't go through unless someone has effectively been cleared by an appropriate authority. And there are other measures as well that I talk about in my testimony.
And so as it's so as the bill is written right now, network participants comes along after to facilitate transactions. They wouldn't be required, as the bill is written right now, in your understanding, to meet the obligations of the Bank Secrecy Act.
Unless they're a money service business registered with Treasury, they would not. It would not be.
Okay. So let me ask you another question. When bank regulators review applications for charters or for deposit insurance, they consider a bunch of factors, including the character and the fitness of management. And that seems reasonable to me. You want to make sure that if you're opening up a bank or you're safeguarding somebody's money, that management is up to the task and the boards follow basic risk management and so forth. So my next question is this. Stablecoin issues, they perform a similar function, I would argue. Consumers give them their money, and in exchange they get a stablecoin and the promise that they can always come back and redeem that stablecoin for a fixed price. Would the Genius Act, or should the Genius Act, or should our regulatory framework require stablecoin issues to be vetted for character and fitness as we do for other financial institutions?
Excellent question, Senator. My reading of the Genius Act is it does not require that. I think it should require that. It should include that as a part of the application review process that was contained in the McHenry-Waters proposal that was negotiated in the House.
Right.
Similar standards are in the European legislation and in other countries' legislation.
I mean, the concern would be literally somebody like Sam Bankman-Fried could issue a payment stablecoin and regulators wouldn't have any legal grounds to deny his application based on his history, just as a sort of maybe an extreme example. But let me just get it. One more thing in the short time I have left. there's this risk of there's a need to protect from theft and fraud. If somebody falls victim to a hack or a scam, their assets could be gone for good, and there's no reversing that transaction. And we've seen this, of course, happen with digital assets. So if a consumer's bank account is hacked or their debit card, for example, is stolen, people are protected, right? Their liability is limited.
Correct.
And what laws?
That's the Electronic Funds Transfer Act, which does apply
Right.
in those cases. It's very murky with respect to stablecoins. It's not clear whether stablecoins would be treated as funds, whether the accounts would be covered. The CFPB put out a proposal a couple of weeks ago, but obviously that's not moving anywhere given the effective
Mothballing.
closing of the CFPB. But those are very challenging issues, particularly, again, because these are bare instruments that can travel, on a decentralized blockchain. Certainly, though, with respect to entities that are providing accounts or entities that are interacting, intermediaries, we should have similar protections as we have under the EFTA with banks.
It seems to me that there's no mention
Correct.
Anywhere of the Electronic Funds Transfer Act or CFPB. It seems to me that would strengthen this bill if
I
it
agree
was
with you,
if it
Senator.
was clarifying that. I thank you for your lenience, Madam Chair. I appreciate this hearing very much, and I want to say that I think establishing a robust framework for stablecoins is extremely important, and I look forward to the ongoing work that we can do to make sure that these consumer protections are addressed in the bill.
Thank you very much. The chair recognizes Mr. Tillis for